Leaders, politics.
Nobody's ambition is what they blood.
I have fought a very firmly.
Natural occurrence, war, and the world economy.
Good day, viewers, and welcome to a fresh episode of Atn Business on Atlantic Television Network, right here in the city of Port Harcourt. This is the network's medium of bringing the happenings in the economy sector of the society to our discerning viewers. This program is aimed at bringing to the doorstep of viewers the business, financial, and economic activities from all strata of society. Its delivery is accentuated through the various stock exchanges across the world, news about government, economic activities, private sector business activities, laced with expert opinions, stakeholders' analysis, and correspondence reports. The headlines: local IOCs to bid for deep offshore blocks. Bullish trend anticipated as negative performance halts. Fitch gives Nigeria positive ratings. And for business, Alabama legislature stalls gambling proposals. We'll take a short break, and when we return, we'll reel out the details. Stay tuned.
Every day, our lives are changed by history.
We are one people, all of us.
Leaders, politics.
Nobody's ambition is what they blood.
I have fought a very firmly.
Natural occurrence, war, and the world economy.
I belong to everybody, and I belong to nobody.
ATN covers it all on ATN Politics.
People into the country illegally. That is amazing.
Honorable
you human trafficker.
Honorable
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring on-the-spot news, live analysis, expert discussions on trending stories in politics, business, socio-economy, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today, only on ATN.
Welcome back, and now let's go into market reports, local and international business news for today. Interest in bidding for the 12 onshore and 7 deep offshore blocks put forward for sale by the federal government. Correspondents gathered yesterday that the companies have been reviewing the requirements, including technical competence and financial capacity required by the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, to qualify for the bid. NUPRC regulates activities in the oil and gas sector in Nigeria. Members of the Petroleum Technology Association of Nigeria, PETN, and Association of Nigerian Indigenous Technical Oilfield Service Companies in the upstream and downstream sectors have put forward their interest, according to the chairman of the group, Engineer Wole Ogunsanya. We are trying to study the available fields to determine if they are viable in scale for our members, Ogunsanya said yesterday. The 12 petroleum prospecting leases PPLs include 300, 301, 3008, 3009, 2000, 2001, 267, 268, 269, 270, 271, and Petroleum Mining Lease PML 51, while the deep offshore blocks PPLs are 300, 301, 302, 303, 304, 305, and 306. Top company officials who pleaded anonymity because they were not granted permission to speak said, and different conversations have been made public to avoid jeopardizing their chances in the bid. The CEO of Nigerian Upstream Petroleum Regulatory Commission (NUPRC), Engineer Gbenga Komulafe, who confirmed the interest of potential bidders to Vanguard yesterday, said, "The ongoing Offshore Technology Conference (OTC) 2024 has presented a great opportunity to also woo investors for the oil blocks." Bullish trends. Equity researchers have said that the stock market will continue on a positive trajectory this week after 6 weeks of consecutive negative performance was halted following repositioning by investors in anticipation of dividend declaration by corporates. They, however, said that the prospect of higher yields in the fixed income markets could taper the expected rally. The repositioning by investors, particularly in blue-chip companies, resulted in 811 billion naira gains and 1.46% weekly returns. Correspondent analysis of the week's transactions shows that the equities market capitalization rose to 56.323 trillion naira during the week from 55.512 trillion naira in the previous week, indicating a 1.45% increase as corporates continue to publish their impressive first quarter earnings releases and the commencement of the dividend earnings season. The benchmark all-share index ASI rose by the same margin to 99,587.25 points as a result of renewed interest in banking stocks and other blue-chip companies with strong fundamentals. Particularly, investors' interest in FBN Holdings PLC 32.7%, Guarantee Trust Company GTCO PLC 16.1%, United Bank for Africa UBA PLC 12.1%, and MTN Communication Nigeria PLC 6.4% drove the positive market sentiment. Sectoral analysis shows that trading was mixed as the banking and insurance sectors advanced by 9.4% and 1.0% respectively, while the oil and gas, industrial goods and the consumer goods sectors declined by 0.7%, 0.4% and 0.3% respectively. Trading activity was also mixed, with the volume of traded shares advancing by 5.6% week on week to 1.94 billion units, while traded value fell by 4.7% to 32.64 billion naira. Looking ahead, analysts at Kari Asset Management said they anticipate that positive trend would persist in the back of anticipated dividend declarations. They said, "Our outlook stays positive as we anticipate the current trends of gains in the markets to continue, driven by the commencement of the dividend earnings season as corporates announce dividend qualification date." Also, with the gradually seeming uncertain outlook for the alternative investment market where yields are expected to tank partially, there exist entry opportunities emerging in the equity space due to the gradual recovery of the market. Speaking in the same vein, analysts at Corridors Capital said, "We expect investors to adjust their portfolios based on the assessment of 2024 first quarter corporate earnings report. However, the prospect of higher fixed income yields could dampen buying interest, especially in the absence of any significant positive catalysts." The volume of dollar traded turnover in the Nigerian foreign exchange markets NAFEM declined month to month by 37.4% to $3.47 billion in April 2024 from $5.54 billion in March 2024. Correspondent analysis of weekly transactions in the market as published by FMDQ showed that turnover stood at $836.66 million in the first week of April, but fell by 49.5% to $420.33 million in the second week due to the 3 days Eid al-Fitr holidays observed within the week. However, turnover increased by 133.5% to $981.77 million in the third week and fell by 12.3% to $860.54 million in the fourth week. Turnover stood at $379.19 million in the last 2 days of trading activities in April 2024. Meanwhile, the Naira depreciated in both the official and parallel market segments during the review period. The Naira depreciated by 81.57 naira to 1,390 naira 96 kobo per dollar in NAFEM on April 30 from 1,309.39 naira per dollar traded on March 28, 2024. Similarly, the naira depreciated by 20 naira in the parallel market. Correspondence gathering from black market traders showed that exchange rates for the market rose to 1,310 naira per dollar on April 30th from 1,290 naira per dollar on March 28, 2024. Consequently, the margin between the parallel market rates and NAFEM rates widened to 80.96 naira per dollar on April 30, 2024, from 19.36 naira on March 28, 2024. In their economic and financial outlook for the first half of the year, analysts at Cowrie Asset Management PLC expect the naira to moderate in the second quarter of 2024. The naira has experienced significant appreciation against the dollar starting from the month of March to close at 1,000 per dollar and 1,136.04 naira per dollar at the parallel and NAFEM markets respectively by the close of business on April 15, 2024. The government's plan to issue foreign currency denominated bonds in June will further boost forex liquidity in the second quarter of 2024. The ability of CBN to sustain the current naira defense is, however, doubtful given the huge cost of this adventure. We therefore expect that the current naira appreciation will moderate in the second quarter of 2024. We are open for advert placements, bookings, and commercials, and you can connect with us and watch us on ATN socials, Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, X, formerly Twitter, Atlantic TV Net. Watch us live on our website, atlanticnetwork.tv. Against the backdrop of increasing economic hardship in the country, Nigeria's fiscal and monetary policy reforms have continued to attract positive ratings. The latest coming from Fitch, a global rating agency which has reviewed Nigeria's economic outlook to positive from stable. The credit rating upgrade implies that Nigeria is getting financially healthier in terms of credit worthiness, an important basis for borrowing from international financial system. The upgrade was based on three major reforms, namely foreign exchange liberalization, fuel subsidy removal, and recent electricity tariff hike. Fitch, in a statement on May 3rd, said the positive outlook partly reflects reforms implemented over the past year to support the restoration of macroeconomic stability and enhance policy coherence and stability. The CBN has stepped up efforts to reform the monetary and exchange rate framework following last year's unification of the multiple exchange rate windows, and the large differential between the official and parallel market rates has collapsed. Average daily foreign exchange turnover at the official foreign exchange window has risen sharply from 2H23. There has been clearance of $4.5 billion of the backlog of unpaid foreign exchange forwards. The validity of the outstanding $2 billion is being assessed by CBN. And weekly sales of FC to Bureau de Change have resumed, having been suspended since 2021. Shell Nigeria Gas and the Oyo State government have signed an agreement to develop a gas supply and distribution infrastructure that will deliver gas to industrial and commercial users in the state. A statement released on Friday by Shell Nigeria's media relations manager Abimbola Essien Nelson disclosed that S&J will build and operate the gas distribution network, which will serve customers across Oyo State for 20 years. According to the statement, the project will start with the construction of gas distribution infrastructure along a 15 kilometers pipeline route, adding that it will grow to deliver up to 60 million standard cubic feet of gas per day across the state. Correspondents learned that the first gas is expected in the first quarter of 2025. Speaking at the signing ceremony, the Oyo State Governor, Seyi Makinde, described the project as a catalyst for development in the state. The managing director of the Shell Petroleum Development Company of Nigeria Limited and chairman Shell Companies in Nigeria, Osage Okubo, remarked that the event pointed to the value of partnership as Shell continues to power progress in Nigeria through more and cleaner energy solutions for commercial and industrial customers. Building on our presence in the country since the 1960s and the wide marketing and trading reach of Shell Energy, we are excited about developing gas distribution solutions and delivering competitive and reliable energy for power generation and industrial use across Nigeria, Okubo added. SNG was incorporated in 1998 as a fully Shell-owned company. Over the years, the company has become a supplier of gas and now serves over 150 clients in Abia, Bayelsa, Ogun, and Rivers State. Correspondent reports that the federal government said it would stop granting licenses to gas companies with no capacity to build pipelines for gas distribution. This, the government said, became necessary to discourage the transportation of compressed natural gas through the roads. The Minister of State for Petroleum Gas, Ekperikpe Ekwu, made this disclosure when he was in Abeokuta, the Ogun State capital, on Wednesday. When the country must transit from fossil fuel to CNG, Ekwu revealed that he had directed the Chief Executive of the Nigeria Midstream and Downstream Regulatory Authority, Farouk Ahmed, to issue licenses to anyone who could not pipe CNG to the end users. The newly appointed Director General Security and Exchange Commission, Dr. Emomo Timi Agama, will meet with the local and international crypto exchanges on Monday to discuss and seek consensus on the status of crypto in the country. The meeting, convened by the Blockchain Industry Coordinating Committee of Nigeria, would address relevant issues and chart a progressive course for crypto regulations. According to Beacon Chair Lucky Uwakwe, who spoke with Cointelegraph on Thursday, the meeting is open to all digital assets exchange operators, wallet providers, other virtual asset service providers, VASPs, and relevant industry associations and bodies to address relevant issues and chart a progressive course for crypto regulations in Nigeria. Uwakwe explained that the virtual meeting is being convened at the invitation of the SEC chief. He noted that Agama aims to engage with key stakeholders in the blockchain and cryptocurrency ecosystem to address regulatory challenges and opportunities through collaborative dialogue. The associations include the Blockchain Nigeria User Group BNUG, the Cryptographic Development Initiative in Nigeria CDIN, the Digital Currency Consortium DCC, and the stakeholders in Blockchain Technology Association of Nigeria, CBAN. Uwakwe expressed hope that the meeting could spark the right kind of change that would favor all crypto stakeholders in Nigeria and internationally. Everyone's presence and insight are invaluable as we collectively navigate the regulatory terrain and strive toward fostering an environment conducive to innovation and growth within the blockchain and cryptocurrency sector, he said. Recall that Nigeria has taken steps contradicting its December 2023 decision to lift the crypto ban and has since launched probes into the use of cryptocurrency in the country. In February, the Central Bank of Nigeria used the country's telecommunication providers to prevent local crypto users from accessing the websites of various crypto exchanges, such as Binance, Octa Foreign Exchange, and others. Nigeria's SEC also proposed an amendment to the rules guiding platforms offering crypto services, suggesting a hike in the registration fee for crypto exchanges from 30 million naira, $18,620 to 150 million naira, $93,000. Vice President Kashim Shettima on Sunday evening departed Abuja for Dallas, the United States of America, to represent President Bola Tinubu at the 2024 U.S.-Africa Business Summit. The summit is being hosted by the Corporate Council of Africa. The Senior Special Assistant to the Vice President on Media and Communications, in a statement he signed on Sunday titled Vice President Shettima departs Abuja to represent President Tinubu at 2024 U.S.-Africa Business Summit in the United States. The Vice President will join other political business leaders across Africa, the United States of America, and beyond for the summit, featuring high-level dialogues, networking business sessions, and the plenary, all scheduled for the K. Bailey Hutchison Convention Center in Dallas, Texas, said Nkwocha. Among African leaders expected at the summit are Presidents Joe Boakai of Liberia, Lazarus Chakwera of Malawi, João Lourenço, Angola, Mogwetsi E. K. Masisi of the Republic of Botswana, Jose Maria Neves of Cabo Verde, and the Prime Minister of the Kingdom of Lesotho, Honorable Ntame Majara. Besides the summit's plenary, Shatima is expected to speak at the roundtable on African infrastructure investment with a focus on impact and returns. He's also scheduled to speak on a high-level panel of agribusiness focusing on transitioning from food insecurity in agribusinesses. Additionally, the Vice President will speak at a plenary session in Navigating Africa's Energy Future, as well as chair a session dedicated to promoting the Invest in Nigeria initiative. According to the statement, he is also expected an engagement on the sideline of the summit. Shatima is expected to be back in the country at the end of his engagement in the U.S. You are watching ATN Business on Atlantic Television Network. We will be back after this break.
Get ready! As Morrison Communications Limited proudly presents Children's Day Celebration 2024.
Last Small Hotel and Resorts number in room Calabo or off water line bus stop Hackett. On Saturday, May 25th, starting at 8 a.m. It is school march past competition,
Dance competition, drama competition. Teachers and children alike, don't miss out on the fun with Uncle Clown bouncing castle as we cut the Children's Day cake. Admission is just 2,000 naira per child. For participation and sponsorship opportunities, call us now 0806 673 8689 and 0810 634 1777.
This event is proudly sponsored by the Last Small Hotel and Resort with Atlantic Television Network and 99.5 Wish FM Port Hackett, Lesuka Event Center, Gate Place Hotel, 8 Ball Hotel and Lounge, Oma Studio, Osgia Table Water.
Remember that every child is unique. See you there. This event is managed by Pace Expressions Arts.
Special guest appearance, Hilda Dokubo, Children's Day Celebration 2024.
Every day our lives are changed.
Fought a very family.
Natural occurrence, war, and the world economy.
I belong to everybody, and I belong to nobody.
ATN covers it all on ATN Politics today.
People into the country illegally. That is amazing. You human trafficker.
Welcome back to Atn Business on Atlantic Television Network. Now to the rest of our stories. Asian shares were mostly high on Monday after Wall Street ended last week with the stock market's best day in over 2 months in a rally backed by the cooler than expected U.S. employment data. U.S. futures edged higher and oil prices rose. The Japanese yen weakened slightly after its value swung from a low of 160.25 to the US dollar to 151.86 late last week following suspected government intervention. The dollar bought 153.93 yen, up from 152.90 yen. Japanese Finance Minister Shunichi Suzuki told a gathering at the Asian Development Bank's annual meeting Friday held in Tbilisi, Georgia, that rapid fluctuations were hurting households and businesses. The euro rose to $1.0765 from $1.0763. The Hang Seng in Hong Kong lost 0.2% to 18,447.12, while the Shanghai Composite Index rose 0.9% to 3,133.92 as markets reopened after a week-long holiday. A private sector survey Monday showed the country's services sector grew at a slower pace in April due to rising costs, although new orders rose and business sentiment improved. Australia's S&P ASX 200 rose 0.5% to 7,669.50. Taiwan's stocks gained 1.2%. Japan and South Korea's markets were closed for holidays. On Friday, the S&P 500 rose 1.3% to 5,127.79, its best day since late February. Industrial average rose 1.2% to 38,675.68, closed at 16,156.33, reflecting strong gains by technology sector stocks, which accounted for much of the rally. The nation's employers added that 175,000 jobs last month, down sharply from the blockbuster increase of 315,000 in March, according to the Labor Department. The latest hiring tally came in well below the 233,000 gain that economists had predicted. Meanwhile, average hourly earnings, a key driver of inflation, rose less than expected. The modest increase in hiring last month suggests an aggressive streak of rate hike may be finally starting to take a bigger toll on the world's largest economy. That may help reassure the Fed that inflation will ease further, which could move to the central bank closing to lowering interest rates. Friday's markets rally was widespread, though technology stocks powered much of the gains, jumped 6% after announcing a mammoth of $110 billion. The tech giant reported late Thursday its steepest quarterly decline in iPhone sales since the outset of the pandemic. Microsoft rose 2.2% and Nvidia added 3.5%. Several companies notched gains after reporting strong quarterly results. Amgen climbed 11.8% after the biotechnology company gave investors an encouraging update on a potential obesity drug. Live Nation Entertainment added 7.2% after the ticket seller and concert promoter beat analysts' first quarter revenue forecasts. Motorola Solutions closed 5.2% higher after the communications equipment maker raised its profit forecast for the year. Booking Holdings rose 3% after reporting better than expected first quarter bookings and revenue. Another online travel company, Expedia Group, didn't fare as well, despite its latest quarterly results beating Wall Street targets. Its shares slumped 15.3% for the biggest decline among S&P 500 stocks after it lowered its full-year bookings guidance because its variable rental unit has been slow to recover from its migration to Expedia's platform. In energy trading, benchmark U.S. crude rose 23 cents to $78.34 a barrel in electronic trading on the New York Mercantile Exchange. Brent crude, the international standard, climbed 18 cents to $83.14 a barrel. Qantas Airways agreed to pay 120 million Australian dollars, $790 million in compensation and a fine for selling tickets on thousands of cancelled flights, the airline on Australia's consumer watchdog said on Monday. The Australian Competition and Consumer Commission sued the Sydney-based airline in the federal court last year. The Commission alleged that Qantas engaged in false, misleading or deceptive conduct by advertising tickets for more than 8,000 flights from May 2021 through to July 2022 that had already been cancelled. Qantas agreed to settle the suit by paying €100 million Australian dollars, $66 million fine to the Australian government, and a projected 20 million Australian dollars, equivalent to $30 million US dollars, to more than 86,000 affected, short of our own standards. We know many of our customers were affected by our failure to provide cancellation notifications in a timely manner, and we are sincerely sorry, said Hudson, who replaced Alan Joyce at the airline's helm in November last year. A federal court judge has yet to accept the settlement. ACCC Chair Gina Cass-Kotleb said Qantas payment of 225 Australian dollars, equivalent to 149 US dollars to domestic ticket holders, and 450 Australian dollars, equivalent to 298 US dollars for international bookings, were in addition to other remedies already provided by Qantas, including alternative flights and refunds. We are pleased to have secured these admissions by Qantas that it misled its customers, and this agreement that a very significant penalty is required as a result of this conduct, Cass-Kotleb said in a statement. Qantas' conduct was egregious and unacceptable. Many consumers will have made holiday, business and travel plans after booking on a phantom flight that had been cancelled, she added. Profits plummeted along with the paper value of its investment, but the company said Saturday that most of the businesses it owns outright performed well. The company reported $12.7 billion profit, or $8.825 per Class A share in the quarter. That's roughly one-third of last year's $35.5 billion, or $24,377 per A share. The figures were heavily influenced by a large drop in the paper value of Berkshire's investments. Buffer encourages investors to pay more attention to the conglomerate's operating percent to $11.222 billion from last year's $8.065 billion, as insurance companies showed strong results. On a per-share basis, this year's first quarter operating figure amounts to $7,796.46 per class as a share, beating three analyst estimates by FactSet Research, who predicted $6,701.87 per Class A share. Warren Buffett's company rejects proposals, but it faces lawsuit over how it handled one last year. Berkshire Hathaway board feels sure Greg Abel is the man to eventually replace Warren Buffett. Buffett was a net seller of $17 billion in stocks during the quarter, including trimming about 13% of Berkshire's massive Apple stake. At $135.4 billion, the iPhone maker still accounts for the biggest share of Berkshire's $364 billion portfolio. Buffett said he expected to remain so even up to when his successor Greg Abel takes over. The estimated, and he knew about the sales before Berkshire disclosed them Saturday. Berkshire reported a $2.6 billion underwriting profit at its insurers, up from $911 million a year ago, as Geico in particular continued to improve its results. However, BNSF Railroad's profits dropped 8% to $1,143 billion. Most of Berkshire's many other companies delivered solid results, including a 72% jump in operating profits at the utility unit, adding $717 million to a total. Revenue grew 5% to $89.87 billion in the first quarter. The two analysts who reported estimates to FactSet predicted $87.044 billion. With no major acquisitions in sight, Berkshire's cash pile climbed to a record of $188.993 billion, even as it spent $2.6 billion repurchasing shares during the first 3 months of the year. Holdings include Geico Insurance, BNSF Railroad, several major utilities, and an assortment of dozens of others keep generating mountains of cash. Would love to spend